Hey guys, doing here once again from DRFX Forex and Trading. Taking a look at the US dollar Japanese yen. Here we can see that the pennant formation has now been complete on this pair, and we're basically moving once again back to the resistance boundary after a U-turn at the support point. Now taking a look at the 4-hour chart, and even looking at this area here, you can see that there's not really much left in terms of a trading opportunity between where we are now and the resistance point. So trading this could provide 45 pips, but it might not be worth it in terms of our trading strategy. And so basically the most prudent move or strategy would be actually to wait until we actually get to this area and then trade breakout or trade a U-turn that takes place at resistance that takes us back to support. So those are the two options that I prefer in terms of trading opportunity for this pair. Wait until we actually hit this area here and see if we got a breakout signal, or trade a U-turn at this area here on the 4-hour chart that carries us back to support. So taking a look at the 4-hour chart, you can see that there's not much left in terms of a trading opportunity between the expected target at this area here. It is very likely that we're actually going to be hitting the resistance, but it's also possible that the market pulls back just ahead of this target and starts a U-turn. So that is another reason why it's often tricky to enter this area here, so close to hitting a consolidation boundary. So 45 pips are on offer between where we are now and the resistance point. So some traders could actually aim to capture the expected move to this area here. But the better money or the larger play would be actually to wait until we actually see a breakout at the resistance area or a U-turn that breaks this trend line and takes us back to support. Because in either case, you're likely to see a movement of several hundred pips in either direction. So a breakout, given the size of this consolidation, is definitely going to provide a lot of pips and a lot of money on offer. And also, if we see a movement at this area here in the form of a strong bearish signal and setup that breaks this uptrend line, then we're talking about a potential move back to support that offers approximately 145 pips. So the better money it would be to wait until we see a setup and signal in the direction of this area. Nevertheless, there's a possibility that if we enter here and place a stop loss just at this area here, we could actually get some movement that provides us with a profitable trade of 45 to 50 pips, approximately 45 to 50 pips. So let's see what takes place. If you trade this, good luck. If you're waiting on this until we see another setup here, then we're gonna like to see that take place over the next couple of days, perhaps towards the end of well, given the movements that are taking place within this consolidation and how swiftly the market moves from a downtrend to an uptrend, this transition, if we're actually going to see take place back to the support boundary, is not going to take a very long while. We'll probably see this take place over the next couple of days, perhaps before the end of the week. So that's the time frame that's the time horizon that we're going to be looking at and waiting for to see another signal that takes us back down here. But in the meantime, there is a possibility in terms of a movement back to resistance that offers between 40 and 50 pips. So good luck, and until then.